Welcome to the weekly crypto check-in, your go-to podcast for navigating the wild world of cryptocurrencies, hosted by Andres Sandate and Robert Swarthout. Today, recorded on November the 12th, we're diving into the latest market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Good, Robert. It's been a couple of weeks, so I'm excited to dive into some of the headlines that have made news here across crypto. There's obviously some things going on Capitol Hill. There's some deals that have been announced. There's obviously no shortage of activity around ETF fund formation and a pardon at the end. So lots to unpack. How you been?
I'm doing good. We haven't recorded for a good bit, and part of it was there wasn't enough news. Then I was traveling, but I never would have thought how impactful a government shutdown would be just to the crypto news cycle. You'd think it would be somewhat immune, but I guess enough of our news these days is about we want legislation or we want ETFs to launch, and obviously those are both connected in with the government very deeply. So but yeah, we'll get started here with our first one. So there's, I guess this is a little bit in the weeds, but there's 1940s acts and there's 1933 acts ETFs. They're slightly different varieties of each other, but functionally trade assets under a ticker, I think is the easy way to say it. There was already a 1940s Act ETF out there for XRP, and that was the sponsor of that was Rex Shares. And soon, I believe as of tomorrow, the 13th, the Canary Funds XRP ETF, it's a 33 Act one, will be launching. And because it's Twitter, maybe originally because it's crypto, it happened on Twitter, but it's just kind of a little bit of somebody trying to call first, basically, and then getting called out for kind of not being first, which is kind of funny here. So, I think the big thing here is there's gonna be a lot of these coming. This one is the first, again, 33 acts. It's a pure XRP holdings. There's no leverage, and it is more tax efficient. The 1940s acts ones can be partially exposed to XRP, and it is less tax efficient structure, is my understanding. So,
the 40 Act funds, you get a little less of that direct exposure. Advisors. I think about this in the context of, as we've talked about, wealth advisors and allocators and people, hopefully tuning into the show or part of our audience. It's like trying to make sense of the crypto space and using terminology that they're familiar with. You don't see as many 33 Act funds launched as you do 40 Act funds. 40 Act funds are more common. Most people would know, mutual funds for, being a 40 Act fund, regulated, a lot more filings with the SEC. There's a certain litmus test. But the difference in the 33 to me is you're getting this direct exposure to this underlying, in this case, XRP, liquidity, and big takeaway, I think, for the market and advisors or people allocating to the space or just following the space is just more liquidity, right? And more transparency around pricing. So you don't have this, big, wide bid-ask spread, for securities that are harder for people to get their arms around. I think the other thing is just when you look at it from a advisor lens perspective, as an advisor, we always think about, is this sponsor have the wherewithal to see this thing through? It's one thing to launch one, it's another thing to get it to scale. So it'll be interesting to see the group behind this. I think we talked about, it's called Canary.
Yes.
They've got a couple of other digital asset offerings out there in the market. I personally don't know a lot about them, but yeah, it will be interesting to see if they can reduce some of that friction that we've seen with advisors adopting, more than BTC effectively.
Right. And I think, you made the point a bit ago, to me, all these ETFs, it's not necessarily about making access easier, which it does. To me, it's bringing liquidity into the system. It kind of tightens the bid and ask. And over time, I think what it will do is it will take control away from the way that crypto currently trades and kind of make it calm down a little bit in the sense, right? I still think crypto has a long future up and to the right personally. But at the end of the day, if you look at how crypto trades, it trades largely on its futures. done on crypto exchanges on leverage. And it's the amount of control over the market that those traders have is disproportionate to the value that they're adding to the system,
Yeah.
or they have at risk in the system. So it'd be great to kind of see that kind of balance out over time and give a little bit of stability to pricing. So
Yeah, and I'm not going to say anything here that anybody that's in the wealth management or financial advisory or investment space hasn't said probably before, especially to their clients. I think it's pretty common knowledge, if you will, that asset allocation has a lot more impact, if you will, on a portfolio's overall returns
right.
than individual, let's say, security selection, right? So I think from the standpoint of asset allocation, if you are in the camp of saying we should have digital asset exposure in the portfolio,
Mm-hmm.
right? And not everybody is, right? To be clear,
Not yet.
not yet. But if you
Yep.
are in that camp of saying we should have some exposure to equities, maybe within equities we want some, we want large cap or we want small cap. Point being, if you believe that you should have, let's say, a 1, 2, 3, some are going as high as 5% allocation to digital assets. Now the question is, okay, we think that if we're doing asset allocation, now the
Mhm.
question is, how do you get that exposure,
Right.
right? And how do you get that if you're in the camp of we just think Bitcoin is crypto
Right.
and crypto is Bitcoin? Well, you've probably answered the question. But if you're in the camp
Yep.
of crypto is much bigger, much broader, much more nuanced than just Bitcoin, while a
Mhm.
lot of it still moves with Bitcoin. I think the other thing that's interesting about this one, this XRP ETF and others that are coming, to your point, is it's going to allow folks to start to get this more beta exposure to the market. Meaning, I'm not trying to pick and choose the winners per se. I just want low cost, easy, you know, highly priced efficient offerings.
Mhm.
ETFs are synonymous with that. I'm sure the fees here will be a little higher, but there's a lot of people that are just like, I don't want to get into picking stocks or securities or cryptos. I want to get into getting low cost beta exposure and let the market do what the market does.
100%.
Um,
Yeah.
and I think that's gonna be, to your point, like where we see, this continuing to go is people are gonna be looking for these regulated, familiar wrappers. That's jargon for the fund structure that
Mhm.
they can access for their clients or to build a portfolio and do so in a low cost way. And you have to think that if this product, from you know from the 33 Act, spot ETF perspective with XRP works, like there's going to be imitators, right? So
Absolutely.
yeah, but I think a pretty cool headline for for evolution in the industry.
Yep. I totally agree. Awesome. Well, move on to our second one here. This will be a topic I think we talk a lot about over the next couple months. But the big draft bill is coming out of the Senate Ag Committee,
Yeah.
and obviously they haven't made tons of progress due to the shutdown. But now that they're kind of seemingly getting back in gear, the draft was released, and there's some good parts. There's some probably some parts that need improved. I wouldn't say that there's any bad parts necessarily, just opportunities for improvement in different places. I think the big headlines is the CFTC is going to be the main regulator of crypto. I think that most saw that coming because most of these cryptos act like a commodity when they're truly decentralized. So that makes total sense there. Again, the SEC will have a reduced role because they are more securities focused. So the tokens that, or excuse me, the cryptos that still act like securities will be regulated by the SEC under these current guidelines. And there's some work to be done around AML and stuff like that, but it's progress. From a perspective, there was a quote, and they didn't name the person, but a crypto trade association chief was gave the comment that the bill is a good start, but it still has a long way to go before the industry can support it. So, there was original hope that we would have this by the end of the year. I think that is highly unlikely at this point. Just obviously wasting a month or a month and a half didn't help there. But so maybe we'll see it early next year and be able to celebrate along with everyone else.
Yeah, I keep, kind of going back to some of the fundamentals around the adoption of this space for broader swaths of the investing public. um, things that I think, individuals, I don't want to say take for granted, but when you have money at a bank, or you have money at a brokerage firm, or you have money at uh, a custodian, you sort of take, I don't want to say you take for granted, but you assume that those institutions are safeguarding those assets. And when you log into your account, you're going to see your holdings, you're going to see price, you're going to see transaction history, you're going to be able to pull all these reports, right? And one thing that I did notice that the bill did is it allows for, I guess, this entrepreneurial, decentralized element of the crypto
Mhm.
industry to survive, right? I know
I
that you and I
think
had
we
talked about
flourish.
this.
Yeah.
Right. You and I talked about this stuff going back a few years. Like, does this whole industry go to a much more centralized, institutionally heavy, dominated by the big banks, dominated by the big asset managers, and it really pushes out that decentralized,
Hmm.
uh, business that is kind of the original sort of DNA of how
Hmm.
this all got started. It seems that they, and correct me if I'm wrong, but the bill explicitly does protect for things like self-custody and decentralized kind of innovation to continue to happen.
Yeah, it's a big deal because, especially, granted, we had a 4 years under the Biden administration where they were trying every way to kill crypto, but like specifically, they went after software developers in a couple cases, and it wasn't like the software
Yeah.
developers developed software and did something bad. They developed software that somebody else took and used in a bad way, and then they tried and they literally held the developer liable,
Hmm.
which is not a way to promote innovation
Yeah.
in
Yeah. I
any
mean,
form. Yeah.
right. We saw companies moving offshore or looking to
Yes.
establish, their headquarters in Asia or Europe. It just does seem that this draft bill is saying we being, I guess the legislature, the legislators and, lawmakers are saying we want this industry to not only survive in the US, but to really thrive again,
Hmm.
and innovation to happen here. So I thought that was interesting. And then, yeah, from a timing perspective, I mean, everybody now, I think, focus shifts around this to not if is this going to happen, but more around when
Absolutely.
and how fast, right? Are we talking the first 3 months of 26,
Hmm.
or do we get into danger territory where now it's been midterm issue
Right.
and there's a lot more, a sort of unknowns and variables that come into play.
Yeah, absolutely. It's let's hope that it doesn't get caught up in all the other drama that will be Congress next year. So,
Yeah.
um, but I guess we'll have to wait and see. So we'll move on here. Our third topic is Charles Schwab is buying Forge, and Forge is a secondary shares platform. A lot of privately held companies. You can go if you're an accredited investor, you can buy shares through there, pre-IPO type situation. So as we were kind of preparing notes for this, you brought up that um, there was another deal that happened with, gosh, I'm forgetting the name offhand now that I'm
Morgan
mentioning it.
Stanley.
Morgan Stanley. Yes, yes, thanks.
Yeah. They
Um,
acquired equities in.
equities in. So there appears to
Yeah.
be a bit of a race to gobble these guys up. And I imagine these platforms still get to live on and exist. I don't think this is anything about like putting away a competitor of sorts. I think it's purely about trying to capitalize on people going after alternatives. So
Yeah, a couple big trends. You hit on it, right? It's these platforms. In the case of both of them, they serve large swaths of clients. I mean, Schwab is, sort of the original retail brokerage firm, and Morgan Stanley, one of the sort of preeminent wirehouses out
mhm.
there with the, advisory, financial advisory platform, with tens of thousands of advisors. There's no denying, though, that if you look at a few big things, these matchups or these hookups are potentially, very lucrative businesses for both firms. On the one hand, you're hearing a lot more conversation in DC about, yes, expanding the definition of accredited, allowing people in 401ks to invest. You look at the number of companies that are publicly traded, through the last 20 years, and it's just gone down year after year after year.
Yeah.
Yet the private markets and the availability of capital in the private markets, has just skyrocketed.
Hmm.
And so companies now can raise the money that they need and want largely in the private markets. The IPO is no longer the only exit. For
Right.
some companies, it makes sense. And so you have to have, as far as recruiting employees, you and I talked about this, and you've
Hmm.
started software businesses. I mean, one of the things that you can offer early employees is equity or options. And this secondary market has just grown, dramatically in the last decade because of a lot of those variables. And
Hmm.
these platforms now, I think, are a step towards, ultimately, I think you see tokenization,
Hmm.
and I think you see these platforms offering their ultra wealthy clients first, but ultimately, their retail client, the
Hmm.
mass affluent, the ability to invest in the next, XAI or the next,
Sure.
hot tech company that they can get an allocation for. And I would think that you'll ultimately have a large private market of these companies, the 500 most well-known private companies available, where there's
Hmm.
regular buying and selling of shares, just like you do in the
Right.
equity market. I think that's where it all goes,
Hmm.
personally. So I think these are moves to get ahead of all that. um,
Yep.
and yeah, we just saw two of them in a very short period of time, so it made a lot of news.
Yeah, there's not a lot of these platforms out there. It's quickly like there won't be
Right.
an independent one, if there is at this point. I don't know the
Yeah.
full landscape, but it's got to be getting close to that. So
Well, and we already know that Nasdaq Private Markets is they're more well known as the the public facing, or
sure,
tech heavy exchange,
change, right?
but they have a whole private market side of their business.
Hmm.
For folks that are listening that want to go learn more about, where they do a lot of things behind the scenes for these you know
It's
late
pre-IPO.
stage,
Yeah.
yeah, pre-IPO companies,
Hmm.
and they're very active in this whole ecosystem. And I think more of these exchanges and more of these institutional firms are recognizing, like, we have to have a foot in the private markets in some way, shape, or form, or we're just not going to see the kind of growth and get the kind of valuations that they want to get from
Hmm.
Wall Street.
Yeah, the only thing that I thought about when I saw these deals that I was like, good for them because this Schwab buying Forge, that was $660 million, a good sized deal. Is like obviously they took the deal in front of them, but like the SEC is contemplating changing the accredited investor rule to broaden it. All of a
Yep.
sudden, that market gets a lot bigger. Obviously, this is why Schwab, this is why Morgan Stanley wants these, but like it gets a lot bigger. If they just had waited a year, like does their valuation double or triple, right?
Well, I wonder that too, but if I'm on the board of these companies or I'm running one of these, how long and how much capital does it take for you to basically compete head to head with Schwab and
Correct. Schwab could
get
be like,
that
we're
many
moving around.
accounts?
Like, yeah, absolutely.
Yeah. Yeah, pretty fascinating. Like, but yeah, I think so much of this comes down to two. I wonder if these smaller, nimbler firms are maybe further ahead than some of the bigger firms around
Hmm.
tokenization and technology around adopting the blockchain, and just that continued merger of traditional and
Right.
decentralized finance. And I'm like, maybe it was also about the people that they're getting and some of the
Mhm.
moves that they're making,
Yep.
and to get ahead of their peers.
Yeah. I'd imagine even fast forwarding 6 months to a year, it's going to be pretty clear how they plan to use these platforms, if anything different from what they're currently doing. But,
Yeah. I think it
um,
comes down to liquidity, honestly. At the end of the day, I mean, you're trying to get liquidity in a more illiquid
right.
asset, right? Illiquid shares in private companies. And I
Hmm.
think until you can offer some means of price discovery and structure around that, your more mainstream advisor, more mainstream investor is just not going to play because they don't believe in it, or they don't believe in the price. And there's a lot of valid concerns
Hmm.
there. But I think to the extent you can centralize, you can put it on exchanges, you can marry these companies up,
Hmm.
all of a sudden, oh, now Schwab's reaching out with this offering,
Right. It's
or
different.
Morgan Stanley.
Yeah, this may be a cascading of, I guess, series of dominoes here, but like, so they buy these, they obviously have a much bigger audience on Schwab or Morgan Stanley to bring these products to. What quickly could actually become the bottleneck is these private companies have a 2,000 shareholder limit on the cap table, or they have to start publicly disclosing information as if they're a public company. So it's like,
Yeah.
does that number get moved? Like, all these things that might have to kind of be adjusted as they kind of broaden things out. So
Yeah.
fun
Yeah.
times.
Interesting for sure.
Yeah. So our next topic, actually about another acquisition, is Ripple, who has been absolutely on this tear the last 18 months with acquisitions. Announced that they acquired Palisade. Palisade is a financial technology company that just offers crypto solutions to businesses. Is the very general way to say it. There wasn't too much on the deal publicly shared on this one, but it's a you know, I had wondered when I saw this one. There was no dollar amount attached to it, and it didn't make too big a news that maybe this was a acquisition for the talent more so than the acquisition of the actual business. So
Yeah.
we'll find out over time, I suppose.
Yeah, I mean, to your point about Ripple, I mean, they've been announcing acquisitions. It seems like every quarter there's another one coming, and
Right.
they just continue to add to this, to me, this corporate narrative or corporate story around just controlling more of the value chain, right? When you think about, like, they have the ledger, right, with
Mm-hmm.
the XRP
XRP.
net.
Yeah.
They have the storage, they have payments, they have some custody solutions,
Mm-hmm.
they offer treasury services, right?
The,
So when
bro-
you think about it,
the
yeah,
prime
all
brokerage.
the prime brokerage with
Right.
Hidden Road, it it's starting to look more, and they don't, and they're just not known to
Mm-hmm.
the retail investor, right?
Right.
Largely. But I think if you go and talk to people that are active in these larger, you know, financial institutions, whether it's banks and, brokerage firms, people on the, the technology side for sure of those businesses, they're recognizing that they probably have a mandate to try to figure out, how do we make things quicker? How do we make things more secure? How do we make things, and who do we partner with to do that? And Ripple certainly is trying to make a play to be, one of those leading secure providers. I read something about Ripple positioning itself to be the JP Morgan of tokenized assets. I
Mm-hmm.
think
I
we've
mean,
also heard people talk about them being the Amazon, or maybe it's
right.
Brad Garlinghouse, the CEO, talking about being the Amazon of crypto. In terms of, people think about Amazon as just this retail storefront, and obviously it's much, much more than that today.
100%. Yeah. It's I think both analogies work, and they're at the rate that they're doing it, I think is the surprising rate, the most surprising to me. These acquisitions are happening, so we literally, it's more than one per quarter, at least the rate that they've been over the last 6 months. So maybe they'll take a break for the holidays to kind of catch the breath. Anyways, our next topic is about Evernorth. Is publicly traded. So Evernorth is a digital asset treasury. You're starting to hear more and more about these. These are the
Hmm.
publicly traded companies that are, for all intents and purposes, just buying crypto, or not, or it's a substantial part of their business where they're buying cryptos, whether it's Bitcoin, Ethereum, in this case XRP, and they're generally applying leverage on it. Evernorth hasn't been super clear as far as I could tell about how they plan to do that, but they bought $1 billion worth of XRP, and they did it like in a week, so it was pretty quick for them. And then they did a SPAC acquisition, or they were acquired through a SPAC that made them publicly traded. So wild west out there.
Well, you and I were at a conference a few years ago where we got the question from somebody about valuation and crypto, and
Right.
the reality is it's a lot of supply and demand right now, because outside of a few big, companies that it's hard to get information anyway, because they're mostly private companies. So unless you're on the cap table, you're not getting a whole lot of financial information.
Mm-hmm.
The point is so many investors who are looking at the space are looking at it through traditional lenses of, PE multiples and, growth metrics and EBITDA margins, and these
Mm-hmm.
traditional metrics through which we value our industry, the financial community value publicly traded companies. And as more of these companies go public, you'd think that more of those traditional metrics and traditional methodologies will come into play, as these companies are required to do some minimal level of
Mm-hmm.
reporting,
Right.
number one. But then they have to, obviously, to be viable, there's got to be a business, right?
Right.
To some extent, there's been a lot of speculation in this crypto trade around these, these DATs, these digital asset treasuries. There's a lot of people
Mm-hmm.
that are very much not fans of them, to be crystal clear. And there's a lot of people that are, hey, they've been beat up here of recent, and this is a great buying opportunity. We're not here to sell people on one or the other, but They've certainly made a lot of headlines, and so that's what we cover. But I also think this notion of being able to, if you think about the energy industry, there's people that want to invest in the quote unquote picks and shovels of the energy industry. I don't want to own the commodity. I want to own the infrastructure, like the limited partnerships that move the product through a pipeline from point A to point B. I want to be in the picks and shovels. You hear that used a lot when comparing and looking at businesses, as they are, I guess, looked at as more safe, because everybody needs a pick and a shovel. And
Mhm.
it's interesting to see that used in the context of some of these names, where you're trying to get away from this direct token exposure. And if you're like a wealth advisor or an allocator, you're saying, man, I don't know if I can go on this ride with the token. Can I
Mhm.
get something that gives me exposure, i.e., a pick and shovel business, the infrastructure, without some of the gyrations that happen in the market due to
Mhm.
headlines, due to politics, due to
Right.
whatever is going on? And I think this is yet another example of just how the industry and more product is giving investors more choice. Doesn't
Mhm.
mean it's easier, doesn't mean it's easy to value, but it's giving people more choice. There's more price discovery, there's more liquidity.
Right.
All that, looks to be more an example and validation that the market is maturing.
Yeah. As you were talking, I just kind of looked up. So the ticker for Evernorth is XRPN. N is in Nancy at the end. They have functionally traded sideways since they launched on October the 30th. It hasn't been long. But
Yeah.
what I find interesting is I know that they have purchased $1 billion in XRP on the open market. And the XRP price hasn't fallen drastically. It's down a little bit since then, but not drastically. But the market cap of this company is $404 million. So, like, the market thinks that for whatever reason, the $1 billion or whatever they bought wasn't worth $1 billion. I don't know what
Yeah.
else to make of that.
Yeah.
It's kind
That
of
would be called what we call a arbitrage, or a buying opportunity. If you
correct.
have, right, you have an asset, if you will, on the balance sheet that's worth $1 billion,
Hmm.
or at least that's what they
They paid for it.
bought. They
Yeah.
bought $1 billion worth of XRP, but the market is saying the stock, if you will, is only worth
Right.
400 million. There's an arbitrage there, right? So
Yeah, I'm not quite sure why. I don't know. It'd be interesting to watch that one over time.
yeah,
This reminds me a little bit of the when it wasn't Bitcoin ETFs and the Grayscale Trust was out there and it was trading at a discount to NAV, and
yeah,
people were
discount,
so
yeah.
scared to touch it. Again, there may be a good reason why this data is wrong, or not necessarily wrong, just not what I expected. But I'll have to see how it plans out over
Well,
time.
there's plenty of companies out there that have traded at discounts to NAV. You look at the closed-end fund business and a lot of other areas of the capital markets, and yeah, I look at it too as this whole narrative shift around, move to fundamentals. And again,
Hmm.
I'm not claiming that and saying that these are the right two businesses that somebody should go and own, but more the notion that the ability to put value methodologies to in place is going to become easier as more and more of these companies go public that are not as tied to the underlying token. Um,
Hmm.
in the case of Evernorth, it is, but I think more and more of these companies, like Consensus, I think is another subheadline, is was another business that went public, very much tied to Ethereum.
Well, they're on their way to public, which is our next topic. So we'll just jump
Yeah,
to it. So
yeah,
Consensus is going public, and they have more so just bringing it up because there's a lot of these crypto companies coming through the pipe, through the IPO pipe, I suppose. But they have selected JP Morgan and Goldman Sachs to be the lead their IPO. I don't necessarily know the timing on this one. My guess is before the end of the year, or that we wouldn't
yeah.
be hearing much about this right now. But it is investors are about to have their a full option of crypto companies to invest in publicly. For a while, it has been very limited, potentially down to one if Coinbase or some of these Bitcoin miners were out there. So.
Well, there's a lot of advisors and there's a lot of investors out there who just want beta exposure, right? Good luck trying to beat the market. Just put money in low cost,
Yeah.
index tracking ETFs, et cetera, right? There's a lot of people that believe that. And again, it goes back to this whole conversation around asset allocation. And I think as you see more and more of these companies go public, what you probably end up with is indexes. You end up with low cost ways. Ultimately, I mean, the fees will come down over time. They're probably not super cheap today on a relative basis, but
Right.
it gives people the ability to get that quote low cost beta exposure to crypto that I think people want, and they ultimately, I believe, over time are going to want diversification. I think you and I both agree that the space is much broader than just Bitcoin, although that is what's dominated the narrative for the last decade. I think that's going to continue to change as more people learn more about the space.
Absolutely. I could not agree more. So our last one, this is a bit of a, I wouldn't say drama around this because there wasn't. There's this. It smells a little funny. So
Looked
kind of
funny too.
what?
I said it looked funny too. I mean,
Yeah.
smelled, looked,
Yes.
the whole thing.
So rewinding a little bit, this would have been the fall of 23. Binance all of a sudden gets investigated by the DOJ. CZ, the founder of Binance, ends up having a plea deal where he goes to prison for 4 years for not having a adequate AML policy oversight. Blah blah blah. That is out in the news. You can go read all about that. We're not going to waste time on that. He serves his 4-month prison sentence. He's out. He's off doing, I think, learning for children in, I guess third world countries or something like that. So he's staying close to the crypto space. This being CZ. The Trump family, more so the Don Jr. and Eric, they run World Liberty Financial. It's a crypto company that they've started. They have their own stablecoin. Binance took $2 billion and gave it to them so they could hold $2 billion worth of the stablecoin. Okay, nothing seems crazy there on the surface, but then you realize stablecoin providers cannot pay interest to holders, and they're basically earning $54 million a year on just because Binance is holding them. And then shortly, literally within a month of them holding that deposit, CZ gets this pardon, and I imagine it makes him easier for travel. He's not on some kind of bad list anymore because he's already served the time. It's not like they can unserve the time there, but it's just, it does. I wasn't thrilled to see this. It was a bad look in my opinion.
Yeah. Well, this goes back to the industry was going through a very difficult transitionary period during, the last, let's call it 3 to 4 years, right? With the regulatory environment at the SEC, the Biden administration were obviously, it seemed very determined to make crypto viable,
Right.
and more than just a fringe business. And the crypto space didn't do a lot to help itself, right? You had a lot of bad actors, to say the
Yes,
least,
that's
and
fair.
a lot of stuff that just made it difficult for, I would say, the more legitimate companies and actors that were out there trying to continue to build. My whole
Mhm.
takeaway is that this, you agree or disagree, this pardon is one of the last major, I guess, players from that prior era. And
Mhm.
there could be another one out there, or maybe there are. I'm not saying that the whole industry is squeaky clean, and I'm not saying that we're done with some of the bad actors that are hopefully not
Mhm.
causing investor harm. But
Right.
it does seem to be the attempt to try to turn the page and move on. And now let's see what happens with this
Mhm.
legislation. There's a lot of murkiness and a lot of things that are quite ugly with this deal, this
Yeah.
pardon, as I'm sure every pardon in history
Probably.
probably
We
has.
just see more of the details in
We
this case.
just don't see a lot of it.
Yeah.
But this narrative shift, right,
Mhm.
around trying to usher in this era of compliance, this usher in this era of regulation,
Yeah.
and hopefully in the end this will be a bit to the broader story, like a small bit.
Yeah.
It's frustrating to see it play out in the
Mhm.
day to day, but hopefully in the grand scheme of things, we'll look back and say, some guys got off pretty easy,
Yeah.
and the industry needed to move forward and is moving forward.
Yeah.
But
The,
I will say the but is that the Democrats and this whole legislation,
mhm.
I think they have long memories. And I think,
Mhm.
Republicans and the Trumps have to play very carefully. They've been able to push through a lot of their agenda, but you have this big bill out there
Mhm.
that I think the industry, the crypto industry, the financial industry would love to see come to come together
Right.
And I'd hate to think that we go back to bringing this and other related issues up as
Right.
a reason why people are playing tit for tat.
Yeah,
It could happen.
yeah, it could totally could. And to that point, the only one out there with a pardon that I think of consequence right now, not with a pardon that some people would love, would be the Democrats. Admittedly, is the Sam Bankman-Fried, right?
Yeah.
He's in prison,
Yeah.
but he
Yeah.
had given so much to the Democrats. Like that
Right.
could be a bargaining chip behind the scenes.
Yeah. Yeah.
In a crazy world that we live in.
Imagine
Let's
that
hope
guy
it doesn't come to that
resurfacing.
because there'd be people in crypto would be pissed. Like,
Yeah. Yeah.
um, but
No, no doubt.
anyways,
Yeah.
I
Man.
think that's a good place for us to end. We could talk about that all day. So
Yeah.
that's a wrap for this episode of the Weekly
Just a
Crypto
busy
Check-In.
couple weeks, to say the least. I mean, a lot of stuff around adoption, institutional adoption, a lot of stuff around just the further,
Mhm.
storyline around the regulation and the emergence of some new offerings, and some of the players that are making very aggressive strategic moves to consolidate and to sort of build their moat.
Yep,
It's just more to come, a lot more to come in the weeks and months ahead, no doubt. It's a fascinating space.
absolutely. Well, that's a wrap for this episode of the Weekly Crypto Check-In. Keep updated with the latest crypto insights by searching Teton Crypto Capital or the Weekly Crypto Check-In on your favorite podcast player. Leave us a review to share your thoughts or like our Teton Crypto Capital LinkedIn page. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.